All right, let's talk about insurance. I know. It's a word that can feel super complicated, maybe even a little scary. But what if I told you it's really just a story about monkeys, coconuts, and a big pile of leaves? Stick with me here. We're going to break it all down and make it make sense. So picture this. You're a monkey. Life's pretty good, right? You've got a sweet treehouse, all the bananas you can eat. But then, completely out of nowhere, crunch! A coconut drops from the sky and just wrecks your roof. Or a huge storm blows through. That's life, you know? It's full of these random falling coconuts that can mess everything up. What are you supposed to do? Well, this is where our hero shows up, the safety monkey. And this monkey is smart. He's got this brilliant idea. He says, hey, what if everyone in the jungle, all of us, we all put just a few leaves into one big shared pile? Let's call it the safety pile. That way, if a coconut smashes any one monkey's house, there's this giant stash of leaves all ready to help them rebuild. It's like a safety net for the whole community. So how does this pile actually work? The whole system, the whole idea, is built on this one simple concept. You pay a little bit now on a regular basis to save yourself from a potentially huge bill later on. That small, regular payment you make, it's got a name, a premium. In our story, it's like giving the safety monkey 2 leaves every single month. And you're not really buying building materials with those 2 leaves. What you're buying is peace of monkey brain. It's that feeling of security, just knowing that you're covered if something bad happens. Okay, so there is a little catch. The safety monkey says, look, if your house gets hit, you've got to handle the first part of the repair yourself. So in this case, maybe it's the first 10 leaves. That's your deductible. Think of it as your share of the cost that you agree to pay before the big safety pile jumps in and takes care of the rest. And this is where you get to make a choice. It's all about how much risk you're comfortable with. You could choose to pay a higher premium, more leaves every month, and in exchange, you'll have a lower deductible if something goes wrong. Or you could go the other way, pay a lower premium each month to save a few leaves, but you're agreeing to pay a bigger chunk yourself, a higher deductible if an accident actually happens. It's a trade-off, and you decide what works best for you. So I know what you're probably thinking. This is where it feels a little like magic, right? How on earth can my 2 tiny leaves help fix a whole treehouse that costs like 500 leaves to repair? The math just doesn't seem to add up. Well, it's not magic. It's actually about the power of the group. Let's just say there are 100 monkeys in our jungle community, and they're all in on this safety pile plan. Now think about it. If every single one of those 100 monkeys chips in just 2 leaves a month, all of a sudden the safety pile has 200 leaves. It's not just your 2 leaves anymore. It's a massive collective fund. And that is the secret sauce. It's a concept called risk pooling. The whole system works because the odds of a coconut hitting every single monkey's house at the exact same time are just incredibly, incredibly low. So when one unlucky monkey has a really bad day, the combined contributions of the other 99 are more than enough to help out. It's true what they say, apes together strong. Okay, this safety pile is a fantastic idea, but it's not a free-for-all. To make sure the pile stays healthy and the system is fair for everyone, the safety monkey has some really important rules. And this is where you gotta pay attention because it's all in the tiny monkey writing. So you really need to watch out for a few things. First up, exclusions. This is the stuff the safety pile just won't cover. Like, the safety monkey might say, sorry, we don't cover damage if you purposely built your house under a tree we all knew had wobbly coconuts. Then there are fees. I mean, the safety monkey's got to eat too, right? And all of this, every single detail, is laid out in the tiny monkey writing. That's the actual contract. You've got to read it. Seriously. All right, let's bring this all back from the jungle to your actual life. It's time to translate this whole monkey story into the real world, from monkeys to money. And the translation is actually super simple. That banana mobile that got smashed, that's your car, and you need car insurance. Catching a bad bug sickness, that's your health, covered by health insurance. The leaves, obviously, are just money, and that whole safety pile agreement, that's your insurance policy. See, in the real world, all the valuable things you're trying to protect, your treehouse, your bananas, we call those your assets. It could be your car, your apartment, your health, anything that has value. Insurance is what's designed to protect those assets. And on the flip side, that huge, crushing bill to fix everything after the coconut falls, we call that a liability. It's a debt you suddenly have to pay. Insurance is the tool that stops a potential disaster from becoming a real, life-changing financial liability. So we'll leave you with this question, and it's a big one. Now that you get how the safety pile works, just take a second and think about your own life. What's your treehouse? What's the biggest falling coconut you need to worry about? Figuring out your risks is always the very first step toward protecting yourself. Thanks for joining me,